This is your host, George Huss here. Welcome back to our series on making better 401k investment choices. If you really want an easier life, or a bit more money put away, or reduce the amount of pain you go through when the market is moving against you, or you think the market is about to move against you, then what you need is to spend a few moments to grab these simple, effective principles. Before we begin, I just want to clarify what this is. This is a logical, organized, systematic way to measure supply and demand. No predicting, no stories, no fretting over what if. No more settling for the stay the course expert opinion. All you need to pay attention to is what is. Supply and demand doesn't lie. Having this information will go a long way to help you not only get in front of the better 401k investment choices in your plan, but to monitor what you own so that at any given time, you can continue to make better choices. Today, we're going to go over Davis New York Venture Fund, one of the top 5 mutual funds offered in 401k plans today. In the first 2 episodes, we reviewed the American Fund's Growth Fund of America and the Euro-Pacific Growth Fund. If you missed the last 2 episodes, we're shining a spotlight on point and figure charting, an investment method which has been used by Wall Street insiders now for over 130 years. Many forms of technical analysis have been created since, but no other is so brilliant in its simplicity. In my opinion, point and figure charting easily burns through the overwhelming fog of conflicting opinion to reveal the simple, startling truth. Transactions only take place at a price where buyers and sellers agree. The truth is then accumulated in a logical, organized, systematic way to determine if supply or demand is in control. It reminds me of the principle attributed to Albert Einstein. Everything should be made as simple as possible, but not simpler. So let's get started. The next mutual fund is Davis New York Venture Fund, and the ticker symbol is NYVTX. November, Yankee, Victor, Tango, X-Ray. Just a reminder, if you're listening in on the podcast and you're a visual learner, you can view this episode on the 401k Owner's Manual YouTube channel. If you like us on our Facebook fan page, you will get a notice when the complete transcript of this and future episodes are ready for download. The instructions for pulling up the Davis New York Venture Fund on stockcharts.com can be found in either of the past 2 episodes. Oh, almost forgot. Stockcharts.com, they got back to me and they're okay with us using their free charting service to demonstrate point and figure charting. We're going to begin with January 2010, but before we do, take a quick look at the chart and notice that the price movement for the Davis New York Venture Fund is very similar to what we saw in the Growth Fund of America and Euro-Pacific Growth Fund. From 2003 through 2007, each of the funds demonstrated a series of higher highs and lower lows. A clear visual uptrend until we get the supply winning the battle in the beginning of 2008 through 2009, with each of the funds demonstrating a series of lower lows and lower highs. You'll see the same pattern demonstrated in the rest of the funds in the upcoming episodes. Just a quick review. Down the left and right column, you'll see numbers from 40 to 16.5. These numbers represent prices. Across the bottom of the graph, you'll see numbers 08 through 12. These numbers represent years. Inside the chart, you'll see columns that are filled with either X's, which are prices going up, or O's, which are prices going down. In some of the boxes, you'll see numbers 1 through 9, or capital letters A, B, or C. The numbers 1 through 9 represent the months January through September, and A, B, and C represent the months October, November, and December. Focus your attention on the column of X's in between the years 10 and 11. The last X in the column preceded by the number 4 is in the box for the value of $32.50 a share. By this point, you should be able to tell this value occurred in April 2010. The numbers which appear inside the boxes, as well as the capital letters A, B, and C, are for reference only. Remember, these charts measure price movement. They don't measure time. The purpose of the chart is to aid in the visualization of supply and demand as represented by actual transactions at a particular price. Continuing to read this chart, we noticed there was a 3-box reversal down in May, and prices continued to fall until June. Notice the price corresponding to the box with the number 6 inside was at $28.50. Notice too, this was a technical sell signal because the price was lower than the last low on the chart at $29 a share. A technical sell signal is not a call to action. It's simply a term of art used by the point-and-figure chartist because any investment being measured can only be on a technical buy signal or a technical sell signal. There is no middle ground. We'll cover the importance of this distinction at a later date. Also, in the June time frame, we see demand regains control of the price and a 3-box reversal up, but the price, demand in this case, stops at 30 before another 3-box reversal down in July. However, there is sufficient supply to push the price to another new low at 28. At that price, demand re-enters the market and buyers drive the price all the way back up to 30. However, it stops there when supply re-enters in August and sellers drive the price back down to $28.50. Can you see the constant battle between supply and demand, sellers and buyers, sometimes quickly, sometimes slowly? If you're actively measuring, you'll see this happening. If we follow the action just a little further at the price of $28.50, buyers re-enter the market. There's sufficient demand for a 3-box reversal up in September, and demand remains in control through February 2011. This is clear because throughout that time frame, supply never enters with enough force to achieve a 3-box reversal down until March. The 3-box reversal method only captures significant price movement, and that's all we want to observe. It's worth repeating, past performance is not indicative of future results. Charting is about measuring, not predicting. I mentioned before, having used this method for decades, this is an art, not a science. What occurred in September is a testament to that fact. Let me explain. Having given 2 consecutive sell signals, a point-and-figure chartist would assume the price would continue down for no other reason than statistical probability says it should. But clearly, it did not. This is why we measure. We may anticipate price movement, but we do not predict it. If and when conditions change, we have new information to make another choice. Predicting comes with an emotional attachment of being right or wrong. I've seen experts make predictions for over 30 years now, and invariably, when they're wrong, there's a defensive attitude which creeps into their voice, and they begin to justify why some force ruined their perfectly good prediction. If only this or that didn't happen, they would have been right. It's a small consolation for the investor who placed their money on an expert opinion ruined by unforeseen forces. Does the phrase, "stay the course," sound familiar? In the world of investing, it's okay to be wrong. Staying wrong is what gets expensive. Okay, that's as far as we're going to go with Davis New York Venture Fund today. If you want to grab the earliest publication on point-and-figure charting, it was released to the public in 1933 by Victor de Villers and Owen Taylor. They described it as the only method of anticipating stock price movements based on logical and scientific mechanical principles. You can still grab a copy on Amazon. If you want a complete transcript of this episode, like our Facebook fan page, the 401k Owner's Manual, or sign up for free alerts on our website at yourwealthpreservationcenter.com. If you'd like to share something that's surprised you so far, or you hope to learn something that you didn't, leave a comment on iTunes or below this YouTube video. If you'd like a personal invitation to an online free live workshop, jump over to my sister site at 401kealert.com. Thanks so much. Until next time, I'm George Huss, and this is the 401k Owner's Manual.